Hi, welcome back to the channel. Now, in this month's analysis, I am going to walk through a really high level broader market overview. I'll be covering all of the major indexes and asset classes. I'll cover the carnage in mega cap tech, some potential rotations, and as always, I have around 20 individual names for your watch lists going into August. Now, it has taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. For those of you that are new around here and just stumbled onto my work, hopefully the Scottish accent isn't too difficult to understand. But before I get into the charts, if you picked up last month's analysis, hopefully it helped you pivot away from technology and rotation into the small caps. It's exactly what we've seen, so thanks very much for those of you that have reached out on social media with your kind words. I will be covering a lot of the rebound levels this month in technology, as well as some of my favourite charts for the month ahead. Hopefully we can get back to a market where, as most of you know, I do prefer it when the best players are scoring the most points. Now, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted disclosures on the charts. If you're new to the channel, I like to use a combination of technicals and fundamentals. I'm a huge advocate of systematic process, and I think most of you know by now that I don't use any magical Harry hindsight indicators. I timestamp absolutely everything, which is massively important. I'm one of the very few who go on the record with their work, but my work is pretty much for everyone. I think if you are an investor, a trader, if you trade options, if you're a financial advisor or a money manager, you'll probably find a lot of value from the charts and the analysis that I'm about to get into. But my work is not geared towards buy and hold forever, unfortunately. I'm looking for structural trends in the market that will last weeks to months, and I like to use logical targets and price levels. If we sat down and had a beer together, I'd tell you that I'm probably more of a technical investor these days, but my work does apply to all styles. I've got clients at most of the major investment banks now. Hopefully that gives a little bit of credibility, but please do pause the video. Very important disclaimer, make sure you're comfortable with it. But before I get into it, please do smash the like button and subscribe. It really does help with the algorithms, and it really does get my work a lot more noticed as well. But I think where I would like to start this month is really just with the carnage that we've been seeing over the last few days in the market. I think the gist of the questions that I'm certainly being asked is there much more pain ahead? Now, I think for those of you that have followed me over the last couple of years will have seen this chart numerous times. I've always banged the drum on, look, you can't get defensive whilst the yield curve is inverted. The signal is when you actually steepen and come out of the yield curve. Now, one of my clients reached out to me today. Now, I am recording this analysis just after the market close on Friday, and said that the yield curve had made an actual jump today. I think it's at negative 0.08. So it does look like we're starting to get a bit of a steepening of the yield curve, and I think probably what we're starting to see now, especially after the Fed communications earlier this week, is that the market is now starting to kind of anticipate some kind of corrective phase, and I think the steepening of the yield curve shows this really well, just with what can potentially happen when we start to come out of it. Now, you may have seen me post this chart over the last couple of weeks on social media as well. Now, one of the things I always look for with the volatility index is whether or not it's being confirmed by credit spreads and vice versa. Now, what we've had this week is obviously a big spike in volatility. I'll drill it down in a second a little bit clearer, but one of the concerns that I have over the last 48 hours is that credit spreads have made the move with the VIX. So this just is a chart that says to me, Sam, this isn't a time to be a hero. Maybe just stand back, observe a little bit, build in support levels, which I'll get into in a couple of minutes as well, and just wait and see what happens here. But I think what I've observed today, obviously the VIX has had a massive spike. We were pushing up against 30 earlier on today, but it has retreated around 20% just going into the market close there. So I'm viewing that as a positive. But if you're wondering what the color coordination here is, it's a very basic risk metric that I like to use. If the VIX is in between 10 and 20, I'm looking for stocks to buy. It's really that simple. If we're above 20, I'm standing back and observing. Above 30, no way. But obviously if we do get these massive spikes, the VIX then actually becomes a buy signal for the market. But as it stands at the moment, we're between 20 and 30. So the message that I will have with my clients this weekend is that, look, just sit back and just observe here. We already know that with seasonality, I like to use the NYSE composite. I think it gives a better gauge of the overall broader market. The S&P 500 is only a basket of 500 stocks, so I prefer to have a bigger broader look at the market. And I think with the NYSE composite, this is a seasonality chart. As we can see, August and September tend to be a little bit choppy, a little bit dicey. I think coming into every September especially, I always highlight every single year to our clients just to kind of just be on guard for something a little bit nastier. But when we look at the individual indices and obviously the major indexes for the market, the NYSE composite is obviously, it's been pushing up new all-time highs. This week there has of course been a big change of character for the market. I think we all see it in our portfolios, etc. But the big question I have at the moment is this a failed breakout in the NYSE composite? And if it is, are there any charts out there that we could potentially see some kind of rebound and buyers stepping in? So I like to use the NYSE composite in conjunction with other charts. It's not just a one chart stands alone and makes all the decisions for me. So the NYSE composite, very, very on the fence, but I am looking at the Russell 3000, which again is just another chart that I think gives a better gauge of the broader market. And I'm hoping that the Russell 3000 can act as some kind of support level here. And as we know, this could just be a retest before we carry on higher. The S&P 500, again, if you picked up last month's analysis, I was highlighting the upside objectives in the S&P 500. We met them. We've had a little bit of a pullback over the last few days. Not as bad as the Qs, but certainly it's a chart that again just says stand back and observe. I'm hoping to see this 525 level act as support for price. The selling volume over the last few weeks hasn't been above average, so that's a slight positive to take. The Dow again has the same kind of look as the NYSE composite, so going into next week, very, very on the fence as to what this chart does. Already touched on the Russell 3000. The triple Qs, I think this is probably the chart that most of you will be interested in. And I know, the mega cap tech exposure amongst everyone is very high. So I posted this chart to Twitter earlier on today, just highlighting that I'm hoping to see 445 act as support again. I highlighted this chart last month in advance, told everybody that this is a logical target level. And what's happened is, obviously over the last 4 weeks, we've sold off massively. Tech has corrected, but with all corrections, it offers massive opportunity for those that have managed risk on the way down. I think it's the dumbest thing in the world to not consider buying stocks, and not any old stock. I mean, top quality stocks when they've had a haircut of anywhere between 20 and 40%. I think you just have to have a look at them from a buying perspective. There might be a little bit more pain to come to the downside. I think we'll know a lot more on Monday and Tuesday. If these support levels for the Qs give up, then feel free to stand back. And the next support level for me would be around 410. But I am hoping next week that there can be some kind of relief rally in technology, which I'm hoping, of course, will turn into something a little bit more. But I obviously have one eye on the yield curve and obviously the VIX and credit spreads as well. The Russell 2000, the rotation over the last month into small caps and has been massive, but big change of character in the last few days. We've pulled back to the original breakout level around 210. So again, going into next week, I definitely want to see the 2.9, 210 level kind of hold up. I don't consider support and resistance to be a hard price level. Just to clarify here, I know that the level here is 209. It's more of a support and resistance zone that's usually within a few bucks. So I'm hoping to see this kind of zone hold up as support for this pullback. But again, all bets are off if we start to put in failed breakouts in all of the major indexes. Same look with the micro caps. Pulled back to a potential support level here, but obviously goes without saying this is a very nasty looking candlestick for the week. Not just the US markets that are struggling. I've got clients obviously all over the world. Japan, France, Germany. A lot of the charts for the major averages are got a similar kind of look. So there's obviously been some big monetary changes. I think with Japan this week, the market has not reacted very well to it, and like I said, the moves that we're seeing in Japan, which I think is around 16-17% off its highs, it's pretty much crashed already. But I just wonder if the moves across the world will push into the US and make the US corrective phase that we're seeing a little bit worse. But stand back and just kind of observe what is going on there. The bond market, obviously with the 10-year note yield, I'm on the record with my top for rates call back in October. Again, Fibonacci levels, if you're not using them, they definitely help. But I am obviously expecting rates to drop from here. Obviously, the inverse to that is TLT. TLT is now hitting our upside objectives for this kind of phase of the market for TLT. It's been building a very messy base over the last few months. At various points, I've been very on the fence, but certainly the base has pretty much been built. So 99 is our target level here, and obviously a breakout there brings in next target levels there around 110. So if rates are going to continue dropping, then I think TLT is potentially starting to show itself as a bit of a risk-off trade. What I mean by that is money moving out of equities and a little bit of a safety play. It looks like it could be in play for the bond market. And obviously gold is the other one. I think we pushed around 2,500 earlier on today. A little bit of a retreat from those levels. But certainly if you're into commodities and looking for safe haven assets at this moment in time, then gold might well fit the bill. Now, I'm about to walk through, like I said at the start, around 20 individual names. I've built in a lot of potential support levels for a lot of the big hitting stocks, so I hope you find a lot of value from it. If you're still here, please do smash the like button. Like I said, it really does help with the YouTube algorithm. But let's just kick it off with, I think, everybody's favourite, I was going to say penny stock mover, but obviously 2.6 trillion market cap, massive earnings growth, etc. But it's been trading like a penny stock this week. It was up 20%. It had the Nancy Pelosi effect, ripped higher. Obviously, yesterday was a massive down day. And naturally, I'm looking for support levels for big hitting stocks. I think the $100 round number offers a very easy risk management level. So this is actually a chart from our Trade Ideas chart book, and for me, I think it's very, very straightforward. Bullish above 100, obviously big upside objectives, but it is going to be very, very dependent on the broader market not shitting the bed next week, and obviously the triple Qs continuing to hold up as well. If we have an environment where those charts are moving lower, you're going to see that across equities, and these support levels won't mean anything. So please do just be very, very cautious. Same with Microsoft. Big pullback. I absolutely am looking for big support levels for stocks like this. I think the 200-day moving average for Microsoft might make some sense. Again, dependent on the Qs holding up and the S&P holding up as well. But what I like about these charts is they offer a very easy out. So at the least, if there is a relief rally on Monday or Tuesday, you can hopefully get it off to a good start. Maybe start thinking about de-risking positions and then go from there. eBay, one of our stronger stocks, is broken out this week. Believe it or not, there are a lot of really strong looking charts out there at the moment. But yeah, eBay, I think above, if this breakout sticks to landing and has a follow through next week, then certainly eBay could fit the bill for you. Baker Hughes is very interesting to me at the moment. What I love about charts like this are multiple support resistance levels for the stock, and there are folks out there that still tell me every day technical analysis doesn't have any use. Charts like this just make me smile a little bit. But yeah, I think if there's a breakout in the next few weeks above $39, then I think you can add Baker Hughes to your watch lists for obvious reasons. Palantir, they report earnings on Monday. But yeah, I think obviously you have to consider it post earnings. After market close on Monday above $29, it's obviously going to need a positive earnings reaction. But I think that's a massive 3-year cup and handle pattern that's been developing. It's outperforming the market by 29% year to date as well. So very, very strong stock this year. It was a lot stronger 2 weeks ago, like a lot of stocks. I've taken a little bit of near-term pain on this one. I own this stock, but for me, above $29 for a new breakout entry. I'm looking at Amazon as well. Now, if you don't know at the moment, the reason, well, one of the reasons, many reasons, that Amazon isn't just getting over this hurdle at new all-time highs is because Jeff Bezos is currently selling a decent-sized stake that he has in Amazon. So obviously we've had a big negative reaction to earnings, but as I'm sure most of you are aware, dips in the likes of Amazon, etc., offer opportunities. So I'm actually now starting to look at this from a potential buy low, sell high opportunity. I don't know if it will get as low as kind of 150, but if it does get down to this 150 level there, then certainly that's one that I would be looking to grab with both hands, with a very easy out if it breaks below those key Fibonacci levels. Apple, again, it's been a massive gainer for us over the last few months. I think most of you know by now, I'm very much an advocate of buy low, sell high. I'm not one of those relative strength breakout gurus. I think the alpha is actually found in finding trends at their source, not at the end. And Apple is a really good example of this. It has been outperforming. This is a relative strength indicator that just shows how it's performing against the S&P 500 off the lows. Now, this has been moving up and to the right, which means it's been massively outperforming the market. But again, like the Qs, it's pulled back to a big support level. So this is an updated chart for our clients that will be available to them this weekend. Just hoping that this level will act as support. And I think if it does give up the levels below here, I think for me, it would be just say, thanks very much, Mr. Apple. I know it's Apple. I know it's a great company, but potentially manage risk and maybe potentially buy it back a lot lower. GoDaddy, again, one of the strong stocks that I've been talking about. Big breakout on the back of earnings this week. It has been chopping about for the last month. It has been one of our recommended buys, but it is holding up, and it does look like it's putting in a breakout to new all-time highs there. Tesla pulled back to its 40-week simple moving average, which, if you don't know, is pretty much identical to the 200-day simple moving average. But again, like Baker Hughes, very clear support level here. So it'll be interesting to see what Tesla does next week at these levels. It's obviously a very choppy, very range-bound chart. When you look at the longer term, it's one that's actually rewarded a lot of our clients with kind of buying low and obviously selling into strength over the last couple of years. So yeah, I think that this potentially could be a level of support, but we'll see next week. Netflix as well, I'm looking at these levels down around 550 as a potential support level. Obviously met upside targets a few weeks ago, and since then it's just been on a steady stream lower. So be interesting to see what happens with Netflix as well. Now, just for complete clarity, I hope Fizer goes to zero. I don't like the company in any way, shape or form, but that doesn't mean I don't have clients that want to make money on it. So this has been basing over the last couple of months. I think if you are someone who doesn't mind Fizer, then I think above $32 might offer some opportunity. It's already just kind of met our first upside objective this week, but if there is a further breakout there above 32, then that might be something to consider. Charter Communications, this probably won't be on many folks' radars. This is actually one of our high conviction ideas at the moment. It's actually still open, but one of the reasons for it, what I like about certainly stocks that are basing and putting in bottoms, is the short interest. I do like to keep a very close eye on it. I think when you get these breakouts above key levels and there is a decent short interest, then it can really get going and off to the races. Now, I no longer own this stock. I've sold into the strength. I do have clients that are holding it still, but I think any pullback here might offer opportunity for the trend. United States Steel, not a chart that I think many of you will have seen me present in the past. It's more of a detailed chart now, just to explain what's going on with United States Steel here, if you're not in the know about it. Nippon Steel, a Japanese company, have agreed to acquire for $55 a share, $14 billion all-cash deal. Shareholders have approved the deal. EU have cleared the purchase. However, there are issues from the standpoint of the political landscape in the US. I think both Democrats and Republicans both want to veto the deal. But as you can see there's a 19th of July update. Nippon have hired Mike Pompeo to help with the smoothing of the purchase, and for me it's come onto the radar as a 2-month base potential bottoming. So I think there's a lot of bad news that's already been baked in, and I don't know obviously who's buying the stock, but it does look like big money is now starting to move back in. We've had earnings this week as well, and this is what this big reversal is here today. So potentially, if that can take out that kind of 41, 42 level, then perhaps United States Steel has a bit more further upside to go. And if the purchase does get approved, obviously this is the price that you're looking at. Goldman Sachs, again, still working with upside targets around 600. However, worth noting, if you picked up my chart on Twitter the other day, just highlighting the regional banks to sell into all the relative strength gurus that are pumping the regional banks at all-time highs. Just complete nonsense. But a lot of the finance companies like Goldman Sachs, etc., Morgan Stanley, are all coming under a little bit of near-term pressure. I do view it as opportunity, but certainly see where the pullback ends up. But I think for Goldman Sachs, absolutely weakness is opportunity in my book. Rocket companies, massive breakout on the back of positive earnings. This is actually one of our high conviction ideas at the moment. It's went up, it's up like 12-13% today. You'll see here, this is the update that's going out to our members this weekend. I've got an options position in it, but again, going back to the short interest, there's a massive short interest there. For me, this has been a play on a drop in rates. I think today the reaction to earnings and obviously the bond market has had a massive effect on what's happened with Rocket. So I think Rocket is potentially breaking out. AMD pulled back to a potential support level here, long-standing trend line, so I'm hoping that can act as some kind of support. Coinbase, massive pullback in the last few weeks. I think crypto at the moment is kind of shitting the bed a little bit, isn't it? But again, very similar look to Palantir actually, where it's a kind of loose looking cup and handle pattern, but this $200 level, I'll be looking to see if this holds up on Monday. I was looking at this at potentially just kind of taking a position in this today, but ultimately the weakness with the market and the VIX being elevated, I just thought it's not worth the risk going into the weekend. So this is on my watch list for next week. A big breakout in AbbVie, this one of our charts from last weekend. So maybe that has legs if obviously healthcare and the biotechs continue to perform well. One to add to the watch list, I think, for post earnings. Now, I got a lot of heat for this chart a couple of months ago on Twitter. I believe Jonah had taken a lot of issue with my analysis and just basically highlighting that I felt that this was a top for Celsius Holdings at $100. That's absolutely proven to be the case. Now, I've had it on my watch lists for a few weeks, looking at it as a potential buy low, sell high opportunity. But I think for me, what I like about these types of setups is they're obviously not guaranteed. It's not guaranteed to get back up above 50. But if it does, then again, there is a decent short interest there. There's a lot of bears that are probably shorting the stock at the moment, or be forced to cover on a move above 50. So I think this is one to consider just adding to your watch lists for the earnings reaction. It might come to nothing. It could keep going lower. I've no idea. But I think for me, above $50, it makes a lot of sense. And I also have ON Holdings, which I think is kind of building a bit of a triangle chart pattern. So again, I think that is definitely something to add to your watch lists. But if you are new here and you're wondering who it is I am and what it is I do, please do jump on to our website at honeystocks.com. Our transparent timestamp work is all laid out. I only use my own charts and data, but what we provide are access and memberships to all of our premium work, which includes our analysis every single weekend, which is sent out to our clients and members. It includes our best charts and our hot lists. It also includes all of our highest conviction investment ideas. I'll show you what that looks like in just a few moments. It also includes access to our midweek halftime analysis. We provide access to a wonderful community of professionals, investors and traders from across the world. All of our chart books are included, which includes the most liquid stocks and ETFs and commodities from across the world. And if you are somebody that's new to technical analysis, although I don't get into teaching and things like that, I do provide access to our complete TA program, which I built out a couple of years ago. I'm told that it's very, very good. It's one of the best out there. So if you are somebody that's quite new and you're looking to learn a bit more about process building and how to read charts and how to build charts and read the market, I'm told I've built out one of the very best out there. But just to quickly show you what our high conviction investment ideas look like, this is our idea that we went out for NVIDIA. As I've touched on already, I look for buy low, sell high opportunities. Worked out great. TKO worked out great as well. Coinbase was massive. Spotify, which was massive. Valero Energy, big gainer earlier this year. Tesla. Also look for things like capitulation signals and obviously tradable bottoms. These are charts going back a couple of years for Meta and Tesla, but I just want to kind of show just the scope of the work that I provide our clients and members. But I am very, very unique in what I do. I publish on our website for complete transparency all of the high conviction investment ideas that I've ever gone out to our clients over the last 5 years. These are the charts that have been sent out this year, but I've done this every year for the last 6-7 years. So please do check the list there. Make sure that they are the type of stocks that you like to buy. I'm not recommending penny stocks or pump and dumps or anything like that. It's all high quality stocks and high quality analysis. So again, like I said, please do go and check that out. But I think my work is generally a good fit if you're someone who has a mid-term approach, you're looking weeks to months. I think if you're someone who's sick of day trading, can't make it work, maybe you're looking to just kind of build systematic process, maybe you're too busy with work, life, family, and you can't find the best stocks, maybe you want to be part of a community, maybe you're sick of hunting around social media, maybe you just like had to have daily access to a professional analyst, which my platform also provides. If you require a second look at a chart, if you need my chart for whatever reason on my platform, you've got an instant messaging service and you can reach me at any minute of the day. So feel free to check that out. Like I said, it's all laid out on the website for you, but if you have stuck here to the bitter end, thank you very, very much for watching. Have a wonderful weekend. Thanks as always.